Hello and welcome back for another Quant price prediction update, and in this video I'll be diving deep into the technical analysis here on the Quant chart. And before I do so, show some love by first giving this video a thumbs up, subscribe to the channel, and also check out the channel membership. And at the time of this recording, Quant is holding below the 20-day MA here on the 1 hour chart, which is now acting as resistance for us to continue gearing up. We are also holding above a significant area of support at around the $105.2 mark, which is now acting as support for us to continue gearing up. And in my previous video, I focused on a chart pattern that I had here on the 1 hour chart, which is this double top, where we had our common top at around the $109.8 mark, and I was able to draw out the chart pattern having that as the first top. Then we saw the formation of the neckline at around the $107 mark, then the second top, and this is a chart pattern that breaks to the lower side, having the minimum target areas for the breakout being given by the height between the neckline and the tops, and I was able to get that height, placed it below the neckline, giving me a minimum target area at around the $103.6 mark. And you can see that over here yesterday we saw a bit of a breakdown, though we found support at around the $105.2 mark. And as a result of that support, which has continued to hold, we are yet to fully maximize our minimum target areas for the breakdown to the lower side out of this chart pattern to the lower side. And as a result of this horizontal area of support, we also have another chart pattern that is in formation, where if I draw out a trend line over here, we can have this as a triangle. So I can use a trend line to draw a horizontal, another area that is a trend line, so that we can have now our chart pattern over here as a triangle, which is a chart pattern that can break either to the upper side or to the lower side. And given that the area of support at around the $105.2 mark continues to hold, there are chances that we might see that bounce back, see a break out of the triangle to the upper side and continue gearing up. But in case we lose our key area of support at around the $105.2 mark, then we are going to see the breakout to the lower side, where we can expect even a retest of that key area of support before we can continue seeing lower prices and also fully maximize our minimum target areas at around the $103.6 mark for the breakout out of this double top, which is over here. And the minimum target areas for the breakout out of this triangle can be given by the height of the triangle. So using a trend line once more, we can get that height and then place it below the neckline, that is below this area, horizontal area of support, giving me a minimum target at around the $102.2 mark. So in case we see a breakout to the lower side, continue expecting lower prices to the area at around the $103.6 mark, or maybe the $102.2 mark. And that is what I'm expecting on the short-term scenarios, basing it on the key chart patterns here on the Quant chart. And to give you my long-term expectations here on the Quant chart, I'll be basing my analysis on the Elliot wave structures, and I believe that is better seen here on the 4 hour chart. So jumping to the 4 hour chart for further analysis and to give you my long-term expectations. Here on the 4 hour chart, you can see that Quant, after seeing the bear market low at around the $40.1 mark, we started a 5-wave structure to the upside, where we peaked in the formation of that wave 5, giving us a peak at around the $229.5 mark, and also completed the formation of that larger Elliot wave count 1. And after seeing the formation of that larger Elliot wave count 1, whatever we expected next was a corrective structure in the formation of a larger Elliot wave count 2. And using the Fibonacci's, connecting them from the low of the first wave to the high of that wave 1, that now gives me a minimum target in the formation of this wave 2 between the fib level 0.5 and the fib level 0.78, which is a target area that lies between the $134.6 mark and the $80.8 mark, which is the area highlighted here on the charts using this red target area. And because of the corrective nature in the formation of this wave 2, I'm also expecting to see an ABC corrective structure also play out, where you can see that on the charts I'm terming this as the wave A. Then we saw the formation of that wave B giving us a peak at around the $165.5 mark, and I'm now expecting one more leg down in the formation of this wave C to fully maximize our red target area in the formation of this wave 2. And that means that in case Quant continues to see further breakdown, lose significant areas of support, and maybe at some point we lose our key area of support at around the $100.3 mark, there are chances that Quant is going to see further breakdown and get back to the $80-point-something range in the formation of that higher Elliott wave count 2. And once that happens, then I think that will be another perfect entry to get back into Quant, so that we can be able to ride that massive pump in the formation of this larger Elliott wave count 3. So that is what I'm expecting here on the Quant chart on the short-term scenarios and also on the long-term point of view. And also taking a look at the indicators on the RSI, we are trading at around the 47 mark. Also taking a look at the MACD, we have been able to print a bearish cross, suggesting further breakdown. So let's be patient and see how that plays out, and I'll be keeping you updated.